Hi, everyone. I'm Janice Wood. I'm from Benefits for You Too, which now is presenting a senior citizens forum. This is our second season. And I have my guest, John Hung, who was on my show last June and last August. And in June, we discussed life insurance, what the different types of policies meant. And I think it was August 24th or 28th, we discussed centurions turning 100. And John, and talking with him, he wanted now to discuss converting your term life insurance into a different type of life insurance, which we're going to do in a few minutes. So I'm really excited to have John back. And John and I are both life insurance agents. We have our licenses through the state of California. And his expertise is actually life insurance, and mine is Medicare insurance. And I also do health insurance. Right now, if you have a Medicare Advantage plan, you can change that Medicare Advantage plan one time between January 1st and March 31st. So if you haven't had a review in the last annual election period, or you're unhappy with what you selected, please contact me. Also, for regular health insurance, if you, I don't know if you realize it, but if you don't have health insurance, you will be penalized. So that's back to the federal law again. In the state of California, we've always had a penalty. But right now, I'm not going to continue on with that subject. We're going to go back to converting your life insurance policy. Now, one of the things I've learned with term life insurance is that you pick it up because it's it fits your budget at the time. It can be inexpensive, and you will pick it up because maybe you're when you bought your home, they required you to have that mortgage. With the mortgage, they required a life insurance policy. And term is usually the way to go. Or people I know, once they start having children, feel that they need a way to protect their families if something happens to them. Well, John's our expert on this. And so what do you do with those term insurances that are 10 years old, maybe 30 years old, and they're going to expire? And now I see all these ads on television. I don't know if you see them, John, where they talk about buying your insurance, and they'll say, even your term insurance. So let's get started.
Okay. Well, good morning to you. And thanks for describing such a great job. So great job describing the term insurance. One thing I will add to that, it would be that term is great insurance. For some of us, it serves a purpose. But eventually, we just want to know what the term insurance could do without going over what the merits are. And basically, term insurance is an insurance that has a certain amount of years locked in for guarantee of the premium. So like Janice said, 10 year, 20 year, 30 years are a very popular option. So at the time you took out all, it made sense, but eventually it will expire. And that's what we're here to talk about. And that's called a term conversion. So to understand this, I think we just need to understand basically that there's different insurances out there. And we are dividing them into two major categories. One is called a term insurance, which we call it temporary insurance. And the other insurance is called a permanent insurance, which we call it universal life, whole life, permanent life. So the temporary insurance, which we call term insurance, have same amount of coverage, does everything that permanent policy does, except it costs less and has a limited time. And a lot of times we are holding on to this policy, and especially at senior age, a lot of us need to make a decision because each of these policies might include an option called a term conversion. And what that does is that policyholders can choose to convert, meaning switch their term life insurance, which is temporary insurance, into any permanent insurance the company offers. So basically, you're able to continue the term without actually losing the policy. And that's the basic description of term conversion. There's so many merit to it, but a lot of us kind of need to know whether we have that option or not first.
So wouldn't you need to be looking at your policy or talking to someone?
Correct. So this is where I noticed that insurance company nor the agent will contact the client unless they have a game plan together. A lot of time it's an agent and a client talking to each other, discovering and working with the time limit that they have. But a lot of times things can get a little forgotten. So it is our own job to look at our policy. And each of term life insurance policy has the specific clause in there that would allow a senior, not senior, but a person in age to convert or not to convert. Now, it's based on company policy. So some company doesn't offer it. They said this is straight out term. There's no conversion. And after 20 years, it just expires. Those are called straight term. But most term insurance would allow a client to either convert by a certain age, like the popular age seems to be 65. So let's just say a client bought a term at age 40. By 65, they have right to convert that. Now, a lot of times the conversion option might sound like, well, why can't we just buy a new policy instead of converting it? But to get a new policy, the rating might change at a certain age. So by converting the policy, we're able to continue the same rating. So the person who got the policy at whatever age, at whatever rating, they're able to convert it at a certain age. But it has to be based on policy. So each client has to look at their own policy or work with an agent to discover the section in the policy that tells the client how to move forward with the conversion.
Okay, one of the things that I think it's important to realize is that, say you got it when you were 40, that was your example, and now you're 65. Now I know to convert to a whole life or a universal life policy, if you would do a new one, wouldn't you have to go through underwriting? And could you have health issues that you didn't have in the past?
Correct. So maintaining the original health rating from the term policy seems to be the key for the seniors to continue that policy as it was originally designed. That is one of the merits, but there's quite a few more merits. One of the things is that the policy is very, very affordable as a term. So people tend to buy a lot, and sometimes it's really hard to carry the same amount. So some of the policies also let you convert part of your policy. So let's just say, for the sake of example, let's just say you bought $100,000 term and you became to a point where you wanted to convert, but maybe cost prohibitive or you don't need the full amount of coverage, then conversion could be also used for partial conversion to set aside certain amount to be permanent and let the rest of the policy expire when the term expires. So that is that option that we could also use. And the other option is that converting the policy also gives us a chance to make this into a permanent guarantee for their offspring. You know, one of the planning for seniors or anyone is to have their offspring convert their policy. So a lot of time we see that as inheritance option, but it is it's only available if they have the rider or the option in there. So it's very important that everyone who has a term policy needs to look at their term policy and find out if they're convertible, and it will be on the policy.
Now, I'm saying, okay, I'm 65 years old. I don't have that mortgage anymore. Okay. I don't, my children can support themselves. They don't need me. Well, what are the benefits of converting to a permanent policy like a whole life? So why would I want to do that?
Yes. Well, just for the stats alone, uh, not everybody gets paid when they have a term life insurance, meaning that chance of someone dying while they have a term life insurance is actually pretty low. And because of that, a lot of times someone who turns 65 would want that to be a guarantee policy. So term doesn't give you that luxury of saying, even if you were 60 and you have a 30-year policy, that means that you have to pass away by age 90. So that is not considered a guarantee. Rather, we like to have a lot of people who are retiring to know that their policy is guaranteed. So they go with a permanent policy just for that reason, because they want to see it through, make sure someone that they love and care about is protected, no matter what age.
Okay. Now with a permanent policy, okay, uh, you can gain, I want to come up with the correct wording in here. With the term insurance, it stays exactly at the same level, but with a whole life policy, you can earn interest on that money.
Correct.
Right. So that is one of the benefits of changing it over.
Yeah, absolutely. Well, the other part of it is that cash value you just mentioned. So term life is a straight insurance where it just pays a death benefit if you die within the term limit. However, the permanent policy also has a cash component that you mentioned. So by having a permanent policy, it becomes another saving for the seniors if they want to read like that, or they could make it into a permanent gift for their children or the grandkids. We might not be able to go into this too much deep, but we all have a giftable amount that we could give to our grandchildren and children. So a lot of times I see seniors using term life for that particular purpose by converting some or all of it for their children to make sure that they have a guaranteed inheritance. So clients could use that for that manner to make sure that someone will get it. And also saving part, if nothing happens along the way, and if a client decides that, okay, I have a permanent policy, it's building up a cash value, they could also get to the cash value before something happens. Yes.
Which I think is real important, especially as I am a senior myself. I know with a whole life insurance policy, I can leave some of my money that I've gained in that policy. I can leave it to my family members or to a charity that I'm interested in.
Correct.
One of the things that's really important, and I know is becoming harder to come by, you can, once that you start building equity in that permanent insurance, maybe you need long-term care and you don't have a way of paying for it, okay?
Correct.
And you can use it for that.
Yeah.
I just think that's real is something important to do.
Absolutely. I think you mentioned a good point. And sometimes though, the policy might offer more than just the death coverage too.
Okay.
And if that's the case, it will probably be more important than ever to convert that policy to use it for the long-term care purpose as well. But a lot of times, there's so many choices you can make with the permanent policy. It seems like 70 is a new 60s, 80 is a new 70. So we're gonna run into a lot of choices and needs for our money going forward. And having a permanent policy that gives a chance for anyone to say, well, if my children don't need it, I will donate them because it's a guarantee policy. But if I happen to need a certain amount of my assets to be used before I die, then that could also be a good buffer because I see a lot of parents holding on to their assets as long as they can for their children. Which is a beautiful thing. Nothing wrong with that. But a lot of times, utilizing life insurance will give that person more flexibility of using their equity before they pass away. So we are seeing a lot of different benefits of having a permanent policy. Even though it is an insurance, that there's a guarantee that we're going to die. And nowadays, it seems like we're going to get sick somehow as well. So being prepared, not only with the health savings account, but with the insurance that saves cash on the side, so that if nothing happened, there was no rainy day, well, you have a great fund to include to your lifestyle of retirement. So having a term life and throwing that away or letting it expire, it is something that I think a lot of us especially who are frugal mindset, I see a lot of people clipping coupons for groceries and utilizing discounts in their life. But converting a term might be making that amount of money for a simple monthly payment that they could afford. So letting $100,000 term expire, that might not be the good way to go about it, because that $100,000 now has disappeared. But rather, there's a way for a few dollars a month, you can make that policy become a permanent, and you could assign any love to it, any message, any assignment to that money. And we are looking at a permanent situation, giving us enough time to live our life. And if something does happen, you could be assured that it will be there at that moment.
Okay. Now, my other question for you, I have several questions for you. What if I have an employer and I picked up term insurance through my employer and I'm getting ready to retire, or let's just say I'm changing jobs? Will that term insurance go with me? What can I
Yes,
do with that?
yeah, correct. So each company has different bylaws, so that must be looked at. But a lot of times when you retire or when you have sufficient enough of credit, the company insurance allow you to convert that into a policy that you could take. But it's not really a favorable situation. It's not a straight term life conversion that person has, but rather it's a completely different insurance. So work insurance is very, very cost prohibitive to continue after work. That's why we always preach to make sure to have another policy on the side, because conversion and premium, they're all affordable versus work insurance.
Okay. Now,
Yeah.
if I have a term policy and I want to do the conversion, are there any costs to that?
No, there's no cost for conversion, but the premium will jump. And that's where I think we all have like different understanding what the policy is supposed to do. So, one of the aspects that I see is that clients would say, I used to pay $10 a month. Now it's $100 a month because I went to permanent. Well, I don't want to do it. That's fine. Basically, this is not mandatory. However, there are other people who says, I'm not gone good health. I'm not sure if I can get another policy. For just 10 times more, I can continue this. Sure, seems like a bargain. So depending on how you look at it, depending on your health situation, yeah, just differently. But at the same time, the insurance conversion doesn't have to be monthly premium either. So there are a lot of seniors who says, I don't have a monthly budget. I have a fixed income. I have a social security, pension. I can't spend dime more than what I'm spending now. What are my choices? I still want to continue the insurance. That's where you could use some of the CDs and IRA money that are stationary, not doing anything for seniors. So a lot of times we have what we call 7-pay, single pay, or 10-pay insurance, meaning that instead of paying monthly premium, you would convert the term with the single premium. Supposedly you had some CD savings that are not earning interest. And instead of leaving that CD as it is for the death benefit, you're now leveraging that by converting term and using that fund to make a single premium. If that single premium buys you $100,000 of insurance, now you just leverage that premium because you know you're going to buy more than $1 for dollar. So that is the way some seniors think. Some seniors would do it out of their monthly Social Security budget. Some seniors would convert part of it. They might used to have $1 million. Now they might say, I only need half of that, 1/3 of that. So make the cost more affordable, if you will, to continue going forward.
So I'm depending upon what the situation is, John, if you have that term policy and you're in really good health at age 65, you may want to look at a new, completely different policy and go through the underwriting. But
I would think that would be the first option. That would be the choice for everybody. Everybody should do that, but it's not easy as it sounds. Quite honestly, insurance companies are not trying to collect 65-year-olds either. Yeah, it's the premium and everything else. So we do recommend trying to find much option as possible, but the conversion option seems to be ace in the hole for everybody. Because regardless of your current health, regardless of what happened, that policy is not convertible. Now, this is not something that everybody should do, but assuming that you cannot continue, whatever that reason is, budget or the need, this is where you hear those commercials of selling the policy, right?
Yeah.
And you imagine, why are they trying to buy a term life insurance?
Mm-hmm.
Well, number one, it has to be convertible. So if it is converted to whole life, what companies are saying is that we're all going to die. There's a guarantee. We're going to purchase this because we know the insurance policy will never lose money as long as somebody dies. Yeah. So you could kind of utilize that and utilize this as an inheritance as well. So term life, whatever that amount is, now could be freed from your asset and be used. And let's just say the client had to leave a home behind. The home was $500,000. The client can get $1 out of there because they have to leave the home behind for their offspring. So we see this a lot, where on paper, they have a lot of money, but they can't even convert a term life because there's no money for them. So what we see a lot of times that could happen is if they have an equivalent life insurance amount for $500,000 as real estate is, and they could buy that for the fraction of what $500,000 would be. So we see that a lot. We see seniors nowadays anticipating longevity, anticipating utilizing their own assets, like home equities, to better their life. But in order to do that, a lot of people are using life insurance to set aside a certain amount for the future, for the sickness, just in case, but really tapping into their own assets. And for a lot of the insured, the main purpose of having insured is to protect their offspring, their loved ones. At a certain point, it is about giving them the number. So if it is the same number, whether you leave it as the insurance or as an equity, it's now making sense because longevities are now reaching 100 for people where they might not be able to leave the home. If they need to sell the home and use that money to live the rest of their life, why not just set aside some of mine and buy life insurance or convert your term life and let your offspring have that. Okay. So you could kind of use your own asset to enjoy your life.
Okay. I have another question for you on term versus a permanent insurance. Okay.
Yes.
Term insurance, your oh my goodness, I lost the name. Whoever's going to inherit that money, they're going to pay a tax on that money. Isn't that correct?
No, of course not.
Correct me.
So because of the IRS code 101, basically all life insurance death benefits are income tax free. So that's where another benefit would be. The term life that they currently hold, insured hold, whether it's term life, whether it's a permanent life, the death benefit and any cash value that is associated with it are income tax free. So it brings another layer of advantage to the beneficiaries who are going to receive this money. because sometimes real estate or other assets could create a capital gain taxes. But with this benefit, it's income tax free and it holds a lot of favor because of that.
Okay, definitely, because a lot of people are looking for a way to bring down their tax levels.
Yes.
Okay, so that, I think this has really been interesting today.
Yeah, I mean,
Else to
I
add?
hope that people get this message and immediately open their term life insurance book and then start reading it through
Right.
and find the agent and really they just need to start preparing and see what's available and before it expires. And there's no need to convert unless there's a need. But if there's a need, there's nothing better than converting it without any exam or underwriting. Oh, by the way, there are small underwriting. So each company have right to refuse this if there's underwriting requirement that has not been met. But generally speaking, conversions are very easy to do.
Okay, that's really great because I remember when I was doing life insurance, which was many, many years back, you would sell the term and then there was that rider in there where you can do the conversion. Where you didn't have
Correct.
conversion all at one time. So if you happen to show this to younger family members, that's not our targeted audience, you can convert. And John will correct me if I'm not saying it right. You can convert small portions at a time. So it's not all of a sudden you're paying that $10 payment and then you're paying $300 a month for it. You can do it
Correct.
slowly. Okay.
Yep.
But as seniors, we're in a different place than younger families are.
Yes.
It's real important to know that there's a lot of different options out there. And one reason term insurance, I just want to go over really quickly again, you're not building any wealth with term insurance. If you have $100,000 policy, it's always going to be $100,000 policy. But the advantage of having a permanent life insurance policy is that that money will gain interest and usually at a higher rate than what you're going to make in the bank, in a savings account. So if you're saving $200 a month and you're getting 0.25% in the bank, insurance companies are getting somewhere between 5 and 7% on that money. So I think that's another reason why you would want to change it over, even as a senior. You're making your money better for you. Of course. Okay. So yes. Anything else you want to add, John?
Well, one thing that I want to add is that I would like the listeners or viewers to really follow their heart. This is not about the math. It's about continuing your dream of protecting the loved one that you had from the day one. If the requirement is there is a way. Please reach out, but don't lose the original intention.
Yeah. Protecting your loved one also, it's another way to make your life a little bit better. Especially
Absolutely.
If you need long-term care, or maybe you need a little bit of extra income a month. It's another way to go about doing it. Lauren, why don't you bring up for us, that's my director is Lauren, how to contact John and myself. We love to hear from you. John is so easy to work with. I've always enjoyed doing one of these classes with him. He's just so full of knowledge about life insurance. He really enjoys working with people and helping them out and making sure that their families are secure, either from having young children that you have to protect, or even as seniors, we may even have grandchildren that you may be taking care of. And you need to make sure that they're taken care of. It's very common now that seniors are now responsible for their grandchildren. So you could be in that situation also. There's so many different types of variables. And again, I would love to help you with your Medicare insurance or your health insurance if you need any help. So John, thank you very much for being here again. You always have interesting subjects. And if you contact John, I know every week he sends out something new on an email that I get that has something to do with insurance. And the information that he's giving is so valuable. So if I were you, I would definitely contact him just to be getting that type of information. And I do the same thing on health information that's out there. So John, you have a really great day. Thank you very much.
Thank you. Thank you very much, Janice.
I'd love to have you back again sometime. Thank you.
All right. Thank you.
Okay.